Hey everyone, it's Evan here from the Trade Risk on Tuesday, May 1st, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right into the action here. This is a chart of the S&P 500. This is the cash market here, and we are looking at a weekly time frame. So each bar on this chart represents exactly 1 week worth of trading. I'm not going to spend a whole lot of time here because structurally nothing has changed from our last couple of updates here. We still have a pattern in place of lower highs indicated by this trend line down up here, extending from the January highs down to current prices. We have lower highs in place and we have higher lows in place indicated by this rising trend line, which starts from the February sell-off earlier this year, and then it's been kind of just guiding price all the way up here and to the right since that February sell-off. So we are very much in the middle of this range. We're getting tight here, or in the middle of this pattern, getting very tight here. So we're going to look for some expansion, either a break below the series of higher lows or a break above the series of lower highs. That is something we'll be paying attention to heading into certainly the rest of this month. Moving averages here, very flat on this weekly time frame, and you can see so far it is only Tuesday, but we have a inside week so far in place. That means we are below last week's highs and we are above last week's lows. One comment I'll make here with this early action: last week the bulls did a great job at rebounding us off of the lows, right? So we had this kind of nasty sell-off going on for the first half of the week, and then we saw this nice turnaround into Friday, and we closed nearly flat on the week after being down, fairly substantially early on. What you're seeing now this week is an immediate sort of probe back to the downside. So sellers really, wouldn't want to see these lows tested again so soon. We don't want to start breaking through last week's lows, because I'd say, around that level of 26.12, which was last week's lows, which does coincide with this rising trend line. The 200 SMA on the daily chart is kind of floating around there. If we start to break down from there, that would start to spell some disaster or some near-term concern, possibly momentum starting to pick up from what could be a 5 or 6 week consolidation resolve to the downside. And when I say 5 or 6 weeks, I'm just looking at this past half here. Doesn't even take into account the full duration of this pattern, which has been almost a year long at this point, year to date. So that is what I'm looking at there for the weekly chart. Structurally, nothing has changed here with this inside bar, but we want to very much be aware of these higher lows down here around 2600, 2610, and then the lower highs up here closer to 2700. As it stands now, down 0.81% on the week, so not a very favorable start for the bulls, but a little bit of a bounce already. It's only Tuesday off of these lows. So that's the weekly time frame. Let's take a look here at the daily. We're going to go back to that SPY ETF here to look at the daily. And what we'll notice here is yesterday was a fairly significant kind of short-term day. What we saw yesterday was this nice upside open. I think we opened almost 0.5% to the upside, maybe a little bit less than that. But we had a little bit of a kind of an upside pep in our step. We took out Friday's highs, Friday's and Thursday's highs. So we started to look like we could start to move back up into the upper end of this range, maybe get back up to that 270, but we really did not see that strength hold. We ended up reversing, going red on the session, and then seeing a very much an outside sort of reversal day here, where we closed below Friday's lows and below this 266 level that we've talked about quite a bit going back for these many videos. 266 to 267 or so. That's kind of the point of control that I've been looking at as an important sort of line in the sand to gauge kind of who's in control in the short term, sellers or buyers. And as it stands now, we are below 266. We're below a not an aggressively but a bearishly aligned 8 and 20 period daily moving average here. Price is below that, so we need to be a little bit cautious here in the short term. However, looking at today's session, we saw a nice bullish reversal, right? So we had this early selling pressure going, a follow-through day, as many would call it, from yesterday's reversal. So we had a bearish reversal yesterday, a follow-through kind of open this morning. We got all the way down to about 262 and change, and we saw, again, sellers unable to hold those lower prices. We reversed and closed green on the session, kind of a hammer there as we start to head back up towards this 266 level. So as we sort of kind of labeled this market on Friday, and really I think the past several, or at least the past couple of weeks, is we just have many mixed signals going on here and lots of choppy price action. And I think all of these reversals and all of these kind of head fakes that we're seeing, both on a short-term basis and even on this weekly time frame with these big tails on the lower and upper ends of some of these recent weeks, and then some of all the reversals we're seeing here on the daily chart, mixed signals and just choppy behavior. So really, if depending on your time frame, doing less and just kind of sitting back and, you know, really waiting for this market to make a more definitive move is certainly a reasonable approach. If you're a short-term day trader, if you're a really short-term swing trader, there's definitely opportunity in these swings, but it is equally as easy to get chopped up and you know, kind of spin your wheels in place as the market kind of jukes and jives here. So going forward, the levels I'm looking at, again, 266, kind of that point of control, and the same levels we talked about in last Friday's video, 260, the lows here from last week. So 260.81 is the lows from last week, last Wednesday. And then on the highs, right around 270, I think it'd come into right around 271 or so, the highs from 2 weeks ago. I think this is the bigger range, starting to move outside of either 271 or below 260, would start to indicate, you know, you're breaking the series of lower highs or higher lows. So that is the bigger target, where if you don't want to get chopped up, let's wait for a resolve into there. Otherwise, in between these levels, I think, again, just more back and forth action is just going to be the way this market unfolds for the foreseeable future. So nice reversal here today. We prevented further washout and a further sell-off, but structurally nothing changed here. It's just kind of getting back up towards yesterday's prices, flat moving averages, 266, lots of chop around this level. So we'll have to see, you know, we'll just really need to see some more follow through and some more strength kind of prove in here. Last time we saw a reversal like this was last Wednesday. It led to a nice kind of 2-day bounce followed by some chop that we rolled over from. Here's another reversal candle, so maybe this is some type of double bottom here in the short term that will finally get some momentum going in the bulls' favor. We'll have to see, and if it doesn't unfold like that and we start taking out these lows and then these lows here, then again, I think it's time to you know, kind of seek some shelter in case this market really decides to roll over. But for now, trying to keep an open mind, loose opinions here. All I know, you know, we are chopping around, we're consolidating, we got this bigger pattern, we're in the dead center of it, so let's not be a hero. No reason to have bold calls in either direction, and really trying to do less and just remain flexible. So that is the S&P 500. The IWM, nice reversal here, uptick in volume. We lost this cluster, this little support in here, kind of these 5-day lows from last week, and we probed all the way down to 151 and change today before seeing a reversal and closing about 0.5% in the green with an uptick in volume here. So again, very constructive. I could foresee this being a short-term bottom here that bulls can then start to get some follow through and momentum building, and maybe this turns into a meaningful sort of short-term to intermediate term pivot low or higher low. That could be a very, you know, real possibility, but I don't want to get too excited yet because I know it's a choppy market. Maybe putting a tier 1 position on if that's your style or if that's your time frame. If you're thinking of, hey, maybe I'll put a half a position on here in the IWM to see if this manifests itself into a bigger turnaround and more follow through. Totally reasonable. Not something I have on currently at the moment, but you know, if we started to get follow through above 155, take out this cluster of highs here from the past several days and this downtrend line follow through from this reversal, then maybe we have something, you know, a little more confirmation there for us to really grab onto and manage risk against. So something to think about. IWM kind of you know, reclaiming itself or still holding up. We talked about it getting a little weak last on in the weekend video on Friday. Just talked about how it was a little sluggish into the end of the week. Maybe it's recovering that into this week and ready to lead this market higher. But really, it was the Qs that did outstage the IWM today in terms of percentage moves anyway. It's 1.14%. Structurally, right, not as attractive as the IWM. I still like the Russell 2000 structure a little bit better right now for the bull case. But the Qs today on a percentage basis did have some nice performance. We saw Apple running up. Apple reports earnings after this video, or probably while I'm in the middle of this video. So expect that to have a heavy influence here on the Qs tomorrow, depending on which way Apple ends up leaning after its earnings reports. And we saw Microsoft up today. So we saw some of the big tech names here that make up a big weighting up nicely today, and that certainly helped the Qs outshine the rest of the market. Structurally, it still needs to, you know, start breaking above 165 and really above 166 to break this bigger pattern. Very similar to the S&P 500. It's more or less range bound, consolidating and chopping around. So that's the market environment overall. That's the message. A little something for both buyers and sellers here. I think there's pockets of strength, there's pockets of weakness, and I see such firm opinions out there, which is funny. I mean, I understand everybody has to defend their case, but I think this is a market that is offering opportunities on both sides, and if you're flexible, you can take advantage of it. If not, then you know, take a couple of weeks off and wait for this chop to resolve itself. So market environment, that is covered. Let's talk about some of the other major markets here. We'll go to TLT. Starting off the week a little bit lower this week, 40 basis points to the downside. We saw this nice kind of hammer reversal last week. We traded all the way down to 117, reversed and closed green and at the highs of the week. And now we're starting to give a little bit of that back after a Monday open that tried to push higher here. So structurally, TLT is still in a very difficult place here, but we did see a nice bounce off of that 117 level. It led to this 3-day move higher. So about 3 points, 2.5 points higher in the TLT off of this 117 retest. That's pretty good. Now let's see if bulls can put in a higher low or if we fall all the way back to 117 for another test. Right now, again, tough spot to be buying this, but you know, really range bound, 117 on the downside and all the way back up to this recent range up here on the upside. So that's TLT. Let's go to oil next. Minus 1.38% today. It's been carving out this range, and it did manage to hold into it. If we look here on the week, it's down almost 1%. You can see this $14 level here in the USO ETF is proving to be a pretty stiff place, or at least a place that sellers are eager to kind of step up and offer out some of this USO, because we haven't been able to push against it over the push above it over the past 3 weeks. USO has had a nice run this year so far and over the past many months, but 14 or so seems to be the extent of this rally right now. We're back to the lower end of this range. We saw our tail here and a bounce off of these lows, so it's on the bulls now to see if we can defend this 20 period moving average and the lower end of this range. We'll see if they can do it. For now, the trend does remain up, but we are vulnerable of sort of rolling over here from the upper end of this range. Next up, if we go to natural gas here, so our nice move higher, 1.2%. And when we look at the weekly performance here, you can see we are up 1% here, mostly from today's action, so 1% up on the week. What we see here, the pattern is still kind of in play when we look at all these kind of pink purple arrows that I have drawn here on these pivot lows. They kind of keep creeping up to a slightly higher low as we try and form, say, a right side of this base perhaps for natural gas. We are making those pivot higher lows, but we really want to see the upside get taken out here right around 23 in the ETF. That coincides with around $2.80 natural gas, the spot futures contract price, and that's what we really want to see taken out, closed above, and get some volume through that level. We're still waiting for it. We've seen some good volume come in here on the UNG ETF, starting to get a little bit higher volume on these upside moves. That is constructive to see. Now we just want to see it occur above and north of this $23 level. So we still have a long position here in natural gas, looking for this to potentially take flight if we can start to get this breakout. Again, kind of mention the more attractive underlying futures contract here is really what shows a better sort of technical formation and picture rather than the UNG ETF itself due to its slippage over this recent 3 or 4 month consolidation. So that is natural gas. Next up, did we cover? No, we didn't cover metals yet. So yeah, gold, which is an important coverage in this video, because we did start to break down from the lower end of this support. This has been support all year for the GLD ETF in here, right around this 124.50 level. And if we look here at the weekly chart, you can see we are getting we are starting to break down below this range that we've been in all year, below the 20 period, and we're down 1.43% in some early week trading. So for the bulls in GLD here, they're really going to want to see a reversal here into the weekend. This weekly candle, I think, is going to be important, and if you're a gold bull, you want to see us recovering this early damage here and getting a close north of, say, 124.50. Holding this lower end is going to be the ideal situation for the gold bulls. If we continue to roll over here, then we have a nice kind of topping pattern, and perhaps indicates that we have a retest of, say, maybe this trend line down here, which isn't that far below price, but perhaps this is a larger kind of channel, and then if we start breaking down from there, then we certainly have bigger problems on our hand. So gold short term, not looking too pretty here. We are bouncing a bit off of the lows, but we'll really need to see, again, a recovery above 124.40, and it's that US dollar is just absolutely ripping it. It ripped last week and continuing so this week here, looking at the index, UUP dollar index, and you can see just again a gap, or again, just because it's trading the ETF here, but this gap up and then just continued strength today. Very stretched here, coming back into some overhead supply. Maybe this is a spot where it cools off, but certainly some momentum behind the US dollar right now. So putting some pressure on commodities, or particularly gold, has a pretty good impact there, helping helping really depress those prices in gold. And silver, very similar here. This one back to the lower end of its range. This one, again, seeing a little more reaction, and at a critical spot is silver here. This is the 3-month range that we've seen since February in silver, right around 1530. Same thing on a weekly basis. We want to see this hold at 1530 if you are a silver bull, and if you want to see the support hold and you want to see the structure in place, 1530 is a great spot to do it. So keep an eye on there. We get a bigger bounce off the lows here in silver. See if we can get more of a move into the end of this week. It's pretty stretched to the downside. It's fallen basically in a straight line from 1625 all the way down to 15. At the lows 1513. So a little over a dollar move on a $16 ETF here. So quite a big move in just 2 weeks of trading. Maybe that's enough with a retest and undercut of support to wash some of the weak hands out and bounce us higher in silver. So something to pay attention to there at a pretty actionable spot. So that is all I have for today. Let's see if Apple reported yet, just to see if we can catch it. Doesn't look like it. Looks like it'll be reporting in a few more minutes, and something we'll just have to pay attention to there heading into tomorrow. So thanks so much for watching. As always, Tuesdays and Fridays, you can catch these weekly recap videos. Subscribe on YouTube if you like them, and I will talk to you on Friday.